As HDFC Life marks a remarkable 25-year journey, not just for securing lives, but of shaping the very contours of India's life insurance landscape, we bring you a special edition of Life Sessions. This is just not a celebration, it is a reflection and a reckoning and a roadmap. At the heart of all this is our enduring commitment, protecting India with pride, a promise that has guided every policy, every innovation, and every moment of trust. Today's episode offers a rare 360-degree view from the boardroom to the balance sheet, from the policy to the public sentiment. It gives me extraordinary pleasure now to bring on board and welcome our distinguished panel. Keki Mistry, who has served as chairman of HDFC Life and is the director on the board of HDFC Bank. Vibha Padalkar is the managing director and CEO of HDFC Life and a driving force behind transformation into market leader. And then Aashish Agarwal is the managing director and country head of Jefferies. Keki, in Hindi they say, ब्याज असल से हमेशा ज़्यादा अच्छा होता है, which is that interest is always dearer than the principal. Now HDFC Life for HDFC Limited was more like a business which you thought through, it was incubated, and it was like giving birth to a child. So let's walk down the memory lane and talk about it.
All right, so I think there have been several key decisions and milestones during HDFC Life's 25-year history, which clearly stand out and which have helped the company build a foundation for enduring success. If I was to go back, the first was the strategic tie-up with HDFC Bank, which happened in 2002. And this partnership not only widened HDFC Life's reach, but also paved the way for collaboration with multiple other corporate agents. Now, recognizing the importance of retirement planning, and I'm just going through different stages, recognizing the importance of retirement planning, HDFC Life established a wholly owned subsidiary, which is HDFC Pension in 2011, which is to operate the pension fund. This is under the National Pension Scheme. It's broadened its products significantly over time, and as of March 31st, 2025, the pensions assets under management stood at over 1.15 lakh crores, and it enjoys a market share of nearly 43%. Another landmark moment in HDFC Life's history was the successful IPO in 2017, which was oversubscribed more than 3.8 times, reflecting the investor confidence and the HDFC brand, which has helped all these companies over the years. So HDFC Life also pioneered the non-participating savings category in the industry with the launch of Sanchay Plus in 2018. And you know Sanchay Plus has become a very popular product. This was an industry first product, and it set the benchmark for savings plans in future. Most recently in 2023, HDFC Life completed its first ever M&A transaction of any insurance company in India with Exide Life. And this demonstrated the commitment to strategic growth and leadership in the industry. Today, as we speak, there are nearly 2.5 lakh agents, which makes HDFC Life one of the largest private insurance players in terms of the total agent headcount. Like HDFC Limited and the bank, HDFC Life remains focused on integrity, customer centricity, and operational excellence.
HDFC Life, just to put it on record for our viewers, was the first private company to get a life insurance license. So that itself is a benchmark. If we just take the clock back and talk about the last 25 years, let's talk about the khatti meethi yadein, the inflection point.
Few things, and it has been a wonderful journey. And reason I'm saying wonderful is that there were three very key aspects that enabled this journey over the past 25 years, and we were the first ones to get a license. The first one is in terms of regulatory reforms as well as overall market liberalization that the sector went through, like other financial sectors. Second aspect is in terms of the entire digitalization as well as with data and technology wraparound. And last point is in terms of listing of life insurers. That was kind of coming of age of the sector, and now there are 4 listed life insurance companies and some more hopefully in the pipeline. So it has been, you said khatti meethi, some that come to mind is just after I joined in 2008 was the massive global meltdown. So really the rug was pulled from under our feet, and then there were a spate of regulatory changes like unit linked. Margins, for example, went down in those days from something like in the mid-20s to low single digits if I was charitable. And we had to claw our way up and reinvent ourselves on efficiency, new products, different sorts of reinsurance arrangements to where we are back. So it's taken almost 10 to 15 years for margins to come back. COVID was another huge roller coaster, and I'm very happy that the industry paid upwards of 65,000 crores of death claims, often without enough documentation. Just on going out on a limb in the interest of to rise up to the occasion as to why are we a life insurer. I think that's something we are very proud of, and not a single peer company and us had solvency issues while doing that. So there was enough conservatism in terms of reserving. Another thing that is perhaps underappreciated is in terms of nation building. That large chunk, over 40% of the long-term borrowing of the government, 40 to almost 45%, comes from life insurers, and this number will only increase. So I think to summarize, while the journey has been an interesting one, a roller coaster, but I think the outcomes in terms of insurance for all by 2047 and moving towards that, I think we have done a decent job as a sector.
Aashish, you've been a life cycle banker for HDFC. And what do you think have been the differentiating factors for HDFC Group? How have they earned trust, faith, and then confidence of investors? So trust of customers and faith of institutional investors, that's a rarity. But they're making this 25-year-old journey, which is full of roller coaster, very easy for an investor.
No, you're right. I think HDFC Group has been a hallmark of success for most investors, particularly the foreign institutional investors or the FIIs as we commonly know it. I think over the last three and a half decades, the group has created almost $150 billion plus of wealth for investors, for its investors. It's entirely publicly held company. I've been privileged to have been part of a number of transactions for the group over the last 2.5 decades, ranging from IPOs of subsidiaries, including HDFC Life, follow-on offering from the parent and the bank, QIPs, preferential. The beauty is the average return on all these issuance that the group has done has been almost 400%. That outperforms any index returns with least volatility. I think there is a lot of things that go in the making. First and foremost, the group has always been ahead of its time when it comes to identifying the next opportunity to deliver products and growth to its customers and investors. It's been a proxy for India's story across themes, be it consumption, be it capex, be it house ownership, be it rising financial services penetration. I think no matter which way you look at it, whatever has been the theme, the group has been ahead in terms of rolling out products for customers, creating subsidiaries way ahead of its time. As you mentioned, that HDFC Life was the first insurance company. The bank was way ahead of its time in terms of product offering. And I think that has really been the bone of the performance. Lay it up with strong corporate governance, ethics. I think that's something that very few companies and groups have been able to deliver consistently. If I look at from a capital market perspective, I think two things that really stand out for as far as investors are concerned. One has been the investor outreach that the group has successfully done over time, over geographies, across companies. The second thing, and I think we've been part of a number of things. I think one thing which I've always respected about the group, any conversation about anything always starts with keeping investor interest in mind. The phrase, leaving money on the table, it's something that HDFC leadership has consistently reiterated. I think the thought process is, let's leave money on the table. Let's not optimize the pricing. We want investors to make money across any company. Growth, corporate governance, investor outreach, and investor interest in mind. And that is what makes the group what it is today.
A number of satisfied customers. Ultimately, that is
the
true benchmark for anybody.
That's right.
The HDFC cloth is, it is the epitome of corporate governance, financial prudence, and also number of satisfied customers. How has that really influenced the big group philosophy in influencing HDFC Life's work culture?
So Nikunj, the legacy of trust and financial prudence, which HDFC practiced for multiple decades, has always been ingrained in HDFC Life from the very inception. Prudent risk management and a disciplined financial approach has always ensured that HDFC Life maintains the stability and solvency that is required, even in difficult times, like Vibha talked about COVID and 2008 and 2009, stuff like that. To give you an example, HDFC Life manages credit risk through robust, very strong investment philosophy, where most of the debt instruments are in the highest AAA category. This ensures creditworthiness and stability. Also, HDFC Life, like HDFC Limited, has never really chased short-term gains. But the whole focus has been on building sustainable long-term growth through customer-centric products and through very ethical business practices.
Vibha, historians, they love to divide their timeline into two, AD and BC. I'll divide the timeline into just with the same spirit, which is pre-COVID and post-COVID. The industry was gliding before COVID, and it was supposed to hit a point of concern, and then the growth was supposed to make a comeback. So while the turbulence was there during COVID, and even the macros are supportive, last couple of quarters have been a tough ride for the insurance sector. Why is that?
So it's been a combination. Part of the COVID, unfortunately, post-COVID, and that's human behavior. So insurance as a expenditure, unfortunately, took a little bit of backseat. So that happened. There was also a fair bit of regulatory upheaval that the sector went through, whether it was tax changes which were fairly sudden, whether it was the surrender charges which also possibly distorted why are we giving a long-term guaranteed product. It gives a long-term assurance, especially in our golden years, that the rupee value of what we will get cannot be changed until I'm 99 or some such, right? Which again is a form of security. Any of these sudden changes do distort any sector, and that's what really went through. If you were to look at the more recently, you talked about the last couple of quarters, that is more a macro phenomena. And if we were to dial back, protection gap in India is still one of the highest, given that we are a major economy and probably going to be amongst the top 3 in the world. So that is 91%. If you were to also look at aspects such as penetration levels itself, IRDA's report itself shows that penetration has gone down now to 2.8% rather than increasing. So we are actually moving in the wrong direction. Now, some of this is a combination of creating regulatory stability so that only outliers who are errant will be hauled up and not the whole business model. And given that we are now 25 years of age as a sector. So if that were to happen, then 3 things: awareness, affordability and accessibility. These 3 A's will ace it. So it's a combination. We are a young nation, so we still remain very hopeful that with these 3 A's meaningfully driving growth, and 1 quarter, 2 quarters here and there, we don't really worry about.
So Aashish, we spoke about your association with HDFC Group. You also have a very close association and understanding of HDFC Life. If you really have to share a bird's eye view for our viewers, how do you view HDFC Life as an institution, and how do investors view this company as a franchise?
I'll split the argument into post IPO and from here. I think it's HDFC Life has definitely surpassed most investor expectations since the IPO. I was very closely associated with the IPO back then. As Vibha mentioned, every 4 years the company has managed to double its premiums and profit, which is not a feat that most companies have been able to deliver. There has been a lot of headwinds in terms of COVID, a lot of regulatory changes. I think the company has navigated all the headwinds, all the changes without impacting growth or profitability meaningfully. And meanwhile, they have stuck to the ethos of the group, ensuring that the customers, the investors are always considered first, even sometimes at the cost of a near-term impact on the group's profitability or the company's profitability. All these things, when we look at it together, they've also, from a product perspective, they've been leaders in product innovation, right? Despite having a market leadership position, they've been nimble enough to innovate on product consistently on both product and distribution. That's what investors are looking for. Now, back then, I think the listing itself was a benchmark event because there was only one life insurance company listed. It was not even a critical mass for global insurance investors to start looking at India. But I think HDFC Life changed that.
Vibha, this one's coming your way. Next 3 years, since we spoke about next 3 years would be better than last 3 years, there are a lot of instrumental changes which would happen. One, perhaps a clear guideline on banca. hopefully we would get to know which way the composite license is moving, and the impact of FDI 100% in the insurance sector. This again could lead to some M&A. These are three big landmark changes. How do you see that changing or impacting HDFC?
All positive in the sense that, let's take the first one on bancassurance being an enabler rather than being a disruptor. As it is today, over the last few years, open architecture has been allowed within bancassurance. Question is that are there other forms of nudging banks that have not embraced open architecture? Is that a good idea in having a lot more choice for the customer? Is something for the regulator to decide on. So I see that as a positive. Second is in terms of the insurance amendment bill and maybe open architecture and agency, composite license. I see all of those as a huge positive, because let's see from a customer's point of view. When a customer takes insurance and life insurance from one company, health insurance from somebody else, motor insurance, overseas medical insurance. Now if, for example, not that I want to get into the turf of any life in a general insurance company, but this will give rise to product innovation. Wherein if a customer wants a one-stop shop of many things, then that can be there. So we are already working internally on some product innovation that has life insurance as a core, but also has riders, for example, health riders. Today we have cancer and cardiac, we can have other things also. So again, it's in the spirit of how do you expand the pie, then redistribute the pie. No interest whatsoever in redistributing the pie. So I see that also as a positive. And third, you talked about 100% FDI. There, I always like wherein there is lesser regulation, because now at 25 years, it's a good thing. However, I'm of the belief that and Aashish will know this a lot better and so will Keki, that money flows will come in when there's reasonable regulatory certainty. So today, that's not the reason why money flow is not happening, that you have only 74%. And when you look at capital inflows, it was 26 when I joined this sector, went up to 49, and thereafter to hardly any money has come in. Only 3 or 4 foreign partners have put in money, and fairly meager amounts of money. So we really have some task on hand to see, similar to the taxation system back in time. I think with regulatory certainty of outcomes, money flow will come in. India is an attractive destination, and that's bound to happen. So combination of 100% FDI with some level of regulatory certainty in outcomes will certainly help the sector.
Keki, Aashish mentioned, and I've been privy to the fact that you've traveled the length and the breadth of the world to really talk about the HDFC multiple times, right? And I'm sure in your interactions while you were presenting HDFC limited presentation, so I'm sure investors must have asked you about HDFC Life also. What to your mind was the first reaction of institutional investor when you met them and you spoke about HDFC?
I think very positive, because everyone knew HDFC, and HDFC had a certain brand in India, a certain name in India. It stood for trust, it stood for integrity, for ethics. So when we started HDFC Life, there was obviously a lot of interest in HDFC Life from foreign investors. And typically what is it that foreign investors look at? They look at a combination of multiple things. They look at growth, they look at profitability, they look at long-term sustainability, they look at how the company will go forward in the years to come. So there is so much of focus that investors have on the sector, and the fact that the HDFC group was well known, had stood by for years. Investors were very gung-ho about the group, as I think Aashish mentioned. A lot of foreign investors had always invested in HDFC and HDFC Bank. So HDFC Life became an automatic and easy sort of a pitch to make to them. And frankly, the company has done extremely well over the years. Vibha mentioned about the kind of growth that it has been able to achieve 4.5 years. The various parameters, there has been a doubling of growth. So growth has been there, profitability has been there, conservatism has been there. The company has been very conservative in the way it has kept its reserves, the way it has dealt with people, customer centricity, looking at what the common man wants, trying to satisfy the needs of the common man. And I think most importantly is integrity. The HDFC group has always stood by the belief that you should never do anything which would cause you the slightest bit of embarrassment if the next day in the morning Nikunj was to ask, talk about it. So we've always stayed with that kind of a ethos, and I think that ethos factors down to all the companies in the group.
So the insurance sector, Keki, right now is at a very interesting point. There are about 24 life insurance companies in India. Only 4 or 5 are making money. How do you see the sector evolving in next 10 years?
Vibha talked about the fact that that as the population grows older, today we have a young population. 2/3 of India's population is below 35 years of age. As people grow older, they will need, insurance is a need, it's a must. It gives so much of stability to a person's future life. It's like a house. So insurance growth in India, to my mind, will be strong for multiple years.
Aashish, since we are talking about multiple years, we are talking about a long runway, we are talking about big picture story, which is built to last for decades. I'll throw in one more term, and which is compounding, which is what institutional investors always like to focus on. Can HDFC Life, even though, like you mentioned, has been a 3x ever since it went public, can it be a compounding machine for decades to come?
Very interesting question. I think people forget how compounding works, and we keep telling investors that's the beauty of a great story. Taking from what Keki and Vibha mentioned, it still offers a huge runway for growth. And I think India has always been a combination of not just multiples, but the absolute market cap and the multiples. I think multiple times the question have been asked, India is an expensive market. And I think people look at headline multiple, price to book, price to earnings, price to embedded value in case of HDFC Life, and say it's the most expensive market in the world. What people have underappreciated is the pure runway for growth. And I think nothing can explain it better than if I look at one of the other HDFC group companies, HDFC Bank. The stock went up almost 5x in the first 8 years or 5 years of its listing, from 300 million to $1.5 billion. 20 years down the line, it's a $175 billion company, having gone up another 110x or so. And which is why I think the most important aspect is how long the runway is for growth and how much you can sustain the premium valuations that you have. I genuinely believe India has been a lot about leadership investing. With the kind of leadership the group and the company has had consistently, I think there is a lot more to compound. $20 billion for a market like India in absolute market cap, trust me, the compounding can go on for decades, not just years. And that's what investors are looking for.
Leadership investing, I think nothing epitomizes more than HDFC Group in terms of what the importance of leadership is. So Vibha, last round of questions. I'm going to pick this from Professor Aswath Damodaran, which is that he has defined every company as a curve. Seed, youth, mature, and then decadence. In that curve, where would you fit HDFC Life? Is it still young and agile?
Very much. I think we are in our teens, although we are now 25 years old. But just given that business model changes very frequently, it's as if we are in our teens. We feel young, we feel energetic, lots more to do. And we've been on the right path, whether it's financial inclusion, innovation, trust, some things that Keki spoke about. So the foundation laying has happened of the proverbial house. We are yet to build on it.
Thank you to our panelists for this enriching conversation. It's been inspiring to really get your thoughts from the early years to the present leadership and the investor community. As HDFC Life steps into its next phase and as the life insurance sector matures, it is clear that purpose-driven leadership, financial discipline, and customer-centric innovation will define the path to the insurance for all by 2047. And we continue to bring you such engaging conversations throughout the live session series as we document the journey together. Thank you for watching the show, and we'll see you again very soon with the next episode.